Okay, here's a question for you. Is the housing market back to normal? Joining us now is Brent Wilsey, President and CEO of Wilsey Asset Management. Brent, good morning.
Good morning. Good to be here.
Is there any such thing as normal in the real estate market?
A good question there. Yeah, there is. And I mean, and after several years of craziness where we had, ultra low interest rates, bidding wars, rising prices, rapidly rising prices. It was just crazy. And people, maybe if you bought something a few years ago, you're very happy with it, but that's not normal. And now we're starting back to a more normal market where you don't have appreciation of 20% per year. You can almost give your seller, ask any price you want. I mean, it's just those days are gone. We're back to a normal market here.
Okay, so what do we need to know?
Well, I mean, recent data home sales up 3.2% in May, which is a normal rate.
California or nationwide?
These are nationwide numbers.
Okay.
So, yeah, and when I talk about that too, I want people to realize, I mean, we're nationwide numbers, so it's different by region, different by state, different by city, but these are the average. And we look at it because we want to look at the economy. I do have some numbers for San Diego for you. But when we look at, the pending home sales, they came out last week, they're up 4.8%. And we look at the region, the Northeast was the best with pending home sales up 7.8%, but out west only 0.7%. So things are having some difficulties here in the west. So.
Well, we got people leaving our state too.
Well, yeah.
All you got to do is I always say this: the U-Haul index does not lie.
It does not lie.
And I check it almost every weekend, and it's like, if you want to go from here to Dallas, you're going to have to pay for a lot for that truck. But if you want to go from Dallas to here, it's about a third the price.
Yeah, and that is so important because I always talk about supply demand. Well, people are leaving, the demand's not going to be there, and the supply is going to start to increase. And actually, inventory nationwide, inventory is up about 3.3%, about 4.5 months is the supply now, which is normal. It's about 6 months. Back in the crazy times, it's probably maybe a month, maybe a month and a half. Right. It was not very long, and that caused a lot of craziness with rapidly rising prices on homes.
Okay, so appreciation is up as well.
Yeah, appreciation up, and this is again nationwide. It's up 1.3% from the prior year. People say, "Oh, I'm doing much better." Maybe, but when you look at different regions and again cities, here in San Diego is a little bit disappointing. We're talking about the county of San Diego. It was actually down 1.5, down to 3%. Now I know there's probably some areas, some ultra homes or low homes that it's all different that are maybe up. But at an average, San Diego County is down from last year about 1.3 to about 3% on depreciation, so negative depreciation. And what's really coming in is seller reality. Sellers back a few years ago, oh, I can ask, $800,000 for this home, and I'll have 10 people wanting this home. That is gone. So it now takes, still not a long time, about 29 days to sell a home. Last May is 27 days. I'm older. I remember when it took months to sell a home. But now like, gosh, a month to sell my home, that's terrible. Well, you're comparing to a very crazy time. But a normal market gives you a lot better opportunities. Like we had a problem with first-time home buyers. They couldn't afford a home. They just couldn't get into it. Well, from a year ago, that was 30% of new home sales for first-time buyers. Now it's up to 35%. So that's why I talk about there's positives with this normal home market. And I know, and I told people about my home a couple of years ago, I said, gee, if in 10 years it's up 50%, I'll be thrilled. The days of getting 15, 20% appreciation are gone. Normal for appreciation is probably somewhere for a home, 3, maybe 5% normal good years.
What about interest rates?
Interest rates could be a problem. I mean, we now have, oil's down about $78 a barrel, so we're seeing gas fall at the pump, which means inflation will come down, means they could raise interest rates. Last week, the new Federal Reserve met. They're a little more hawkish. 9 out of the 18 Fed governors said we want to see a rate cut maybe the next, before the end of the year. We also have, with all this AI stuff is crazy, corporations borrowing and borrowing, and what they're doing, there's only so much supply of debt out there. Well, if they're borrowing more, the government, our deficit is going up, so much demand for debt, that will raise interest rates as well. So mortgages, I think at best, if you're buying a house now, don't wait for a lower mortgage. It may come, but get a mortgage now, and if it drops 0.5% or whatever, there are points where you can refinance, but don't wait for a lower rate, because I'm just not convinced we're going to see those.
All right, Brent Wilsey, Wilsey Asset Management. Thanks, Brent.
You're welcome.
All right.